Good morning and welcome to Trade the Day with Larry Benedict and Eric Shamalov, coming to you on our last day of the week, Thursday, because on Friday you guys can write in and ask me anything. I'm here to answer all questions on Friday, so hopefully we get a lot of questions this week, and we usually do. So looking forward to that, and I'm glad you can join us with your hip hop hat on. It looks really good. Perfect. You know what? Perfect for the trading environment of you have to buy everyday retail. I actually
Really, this hat gets you thinking you have to buy every day. That's interesting.
well, come on, dude. You're a product of the environment. You know, I want to make you happy, so I'm gonna announce.
I got
I'm gonna make you happy. You're very rambunctious today, so just relax a little bit. You'll get your bull chance to talk in a minute. Okay, there
it.
there's a market that's making an all-time high today, so you got to be happy. Every time a single equity market makes an all-time high, you get really excited. So I'm gonna. It's a European market. I'm going to give you one guess. What market in Europe is making an all-time high today?
France.
Incorrect. The FTSE
Okay.
100, which has not made a record high in a very long time. So that's at or traded a record high today. So you should be happy. Something's at a record. Makes you feel good. Um,
I was even happier last night when Bitcoin hit a record.
Did it? Oh boy, that thing. You know, it's funny. We talked a second before we got on the air, and what is going to
Sure
happen
did.
to what is going to happen to investors here is they have to adjust their mindset, their timing, and how they're going to be able to make outsized type returns in an environment where the all markets are fairly overextended and on highs, and now you have Bitcoin at 111,000 or whatever it is. Okay, which, listen, we made a new high, but this is not like really an extension. We made this high, we took out a high we made months ago. So it's not like this thing is making new highs, accelerating. It just took out the old high, but there's not money in it the way it was. So reason why Bitcoin became what it was people were able to invest, and I see it a lot with our subscribers. You know, we come up with trades that are outsized. We're trying to make 100% return, 70% return, 50% return, um, with options. And with Bitcoin, it was a beautiful trade. People would come in, open their statement or open their phone and be up 40% in a morning. Okay. That game is over. Okay. So for Bitcoin to go up 40%, it's got to go to 180,000 or 170,000. Those moves are not obtainable at this point in time. So people have to either size up their positions because the volatility is lower, or take their expectations down in the market. And that's what I'm seeing across the board. And then another thing that's interesting is the S&P 500 is pretty much the most widely watched equity index in the United States, okay? Nvidia now is 8%. One stock is 8% of the 500. That is just so outsized. And now the stock is past $4 trillion. Okay. I don't know. It's a chip company. I know AI and demand and this and that. But, in my, you know, tenure as a trader, there have been many chip companies, and Micron Technologies was the king of all kings. And we traded that in the 90s. Okay. So you're going back 30, 35 years. That thing was rock solid, unbelievable, best stock in the market, and then it died. Okay. I'm not suggesting that Nvidia is going to die, but, I'm not calling it a one trick pony because it's not only a chip company, it does other stuff in AI, but it's a AI company. And the move extension there is out. I mean, I can't even fathom what, you know, what 4 trillion, like nobody can. Think about the number 4 trillion. Okay. There wasn't a stock in the market 6 years ago that was over a trillion. Apple crossed that 6 years ago. That tripled. This thing's gone up, thousands. So what do we got left here? That's really the question. What is left here to do? I know 4 trillion. It's funny. I laughed to myself because Kramer likes the stock. He hated the stock when it was lower. When we were crashing in March, he said that on a Sunday, on a Friday night show, that Sunday was going to be the market crash. Then he can turn around and tell you when a stock is at an all-time high that it's a screaming buy. So, I just think that there's so many things out there that are so frothy. Everybody, the retail public has an insatiable appetite to buy stocks every single day. They're buying Nvidia every day. I don't know what they're looking for, but they're buying it every day. And nobody's getting out. So I would say most people are in a big way. Everyone tells me there's dry powder, there's so much money on the sideline. I mean, I don't
Yeah,
know.
you saw that tweet from Ackman, right?
I don't know. I didn't. I'm sure he's long and talking his book, but
He was
today's
talking about the 7.5 trillion of money market funds sitting on the sidelines. So that was to your point that there's money on the sideline.
dude, but there's always money on the sideline.
I
I
know,
mean, no one puts all
I
their
know,
money into the stock market. I mean,
I know. I thought
what?
it was like, okay,
Wait,
there's always.
in your book, what should a 75-year-old person have in the stock market? Honestly, literally zero, but they have like 40% of their money in the stock market. I mean, it's crazy.
I know
Listen,
some risk-taking 75-year-olds, though. I'll be
yeah, we
honest.
have. Listen, a lot of our
They're your,
subscribers.
a lot of them are your subscribers.
Exactly. People are looking for other ways to make money, but really, someone that's above 80 should have most of their money in bonds and, other instruments that are 100% safe. So is it really a true number that money is on the sidelines? Because a lot of that money is uninvestable. You can't invest it. You know what I'm saying? So, or you can invest it, but they're not going to invest it because they're older. And it's funny. The market is down 30, only down 30 or 25. It's actually down 23 handles on the week after being down almost 100. Okay, which is all those numbers are not a lot relative to the price of what we're trading, and it feels like a crash. Like people are like calling me up. Why is the market down? Like it's like you want the thing up every single day, every day. It's not acceptable for you to have the market have a down day. Okay, the market is not looking at any external pieces here to come up with why it's moving. It doesn't matter. Today bonds could be down. Yesterday bonds were up. The market was actually, what was the market at yesterday? Basically,
Yeah.
we ended
Well, I
well.
told you 2 weeks ago we had a very long conversation, and I explained to you, I am banking on crazy. The market gets crazy, and it feels like it wants to get crazy.
But you find this crazy? What's crazy, dude? Crazy is an $80 straddle. Crazy
The
is an
fact that the fact that people are calling you up and complaining that the stock market isn't going up every day. See, you're getting surprised about this. I've
why?
accepted the fact.
But why is that crazy? I'm trying to understand. Crazy to me is when we're talking and a straddle is 75 to $100. That's crazy markets, okay? And we've had those many, many times, many times. Crazy is not a straddle. Where's the straddle? 22? I mean, come on, dude. This is go to sleep market, okay? You know, creep a little higher, creep a little lower, go to sleep. We had a move extension a week ago. The market is consolidating that move extension. There may be another move up, but dude, we're already. Where do you think the S&P is on the year? It's up over 5% after being down 20. So I don't know. That's not big enough. What's crazy? What's crazy that's going to happen?
Actually, historically, no, it's not big enough because the average return annually is higher.
We're only a half a year in, and the average return is definitely lower. If you take 5.5 and 5.5, that's 11. Okay, and the average return is probably 8. Okay,
Okay, you want to annualize it. I get it. I
no,
get
of
it.
course we got to look at the move on an annual basis. This is a bigger move than average after crashing. Okay. So the market is priced for for perfection. Tariffs are meaningless, as you've seen this week, because he's thrown tariffs out there. He's confused the market, Trump, and he literally confuses the market, and the market just laughs. They're like, okay, he's tariffing copper 50%, but next week it'll be 20. We don't even know what he's going to do. So the market is basically discounting that, and it's discounting a number of other things. That being said, you got to respect the pricing. Price is where it is. Um, Gold had a weird one. Gold was crushed, came back, and now is basically back where it was 2 days ago. Still think
Where's
lower.
gold? Why isn't
Well,
gold crash? Where's the gold crash everybody's looking for?
who's everybody?
I don't know. Everybody thinks that gold is done and keeps coming back.
Why? I think it's great trading. We sold it, we bought it, we made money, we got out. We're going to sell it again and make money. I mean, the thing is, listen, I don't know. You're looking at it, it looks bottom end of the range to me, and we'll see if it can hold in here. We're on, the bottom end of the range is 50 points from here or 80 points from here. It's not a lot. I mean,
Yep.
but it is a lot when markets are not moving. So right now, markets are not moving. Really, one stock is holding the Nasdaq up, which is Nvidia, which rallies literally every day. It's $4 trillion, and people want to buy it. Like, I mean, to get to 5 trillion, okay, what are you going up? 25%. I mean, that's like nothing in Nvidia. That's like chopped liver. I mean, they're gonna rip trillions like water. I mean, come on, dude. I mean, I don't even know how they could sell this many chips or make that kind of money.
Well,
It's
right. Trillion is the new billion. You know, we used to have like $100 billion was a big. 2008, we had the bailouts at like 700 billion. That was considered, wow, that's big. Then COVID came along. You had multi-trillion-dollar bailouts. So maybe trillion is the new billion.
Well, I wouldn't say that. I think the market is skewed to 7 or 6 stocks. There are no, listen, how many stocks are over a trillion? Five? So it's all, they're not a trillion, dude. So there's those stocks up here that are 2 trillion to 5 trillion, Meta, Microsoft, um, Nvidia, Apple. That's five of them. Okay, then you got the Tesla at
Top
a
five,
trillion.
top five is Nvidia, Microsoft, Apple, Amazon, Meta.
Right.
It's the
So
Mag Seven.
no, Amazon, Tesla's a trillion. Whatever it is, that go back, go pull up something if you have it. Look at the
Top
top
ten
10.
stocks. Top 10 stocks in S&P are all above a trillion. All.
I get that, but below that, you're nowhere near that. Like United Healthcare was like a top 10 company in the world at like 400 billion, So there's a huge disparity. These companies are 10 times bigger than any companies out there. We've discussed this a million times. It's actually going to get me pissed this morning. Hey, like the value of Nvidia is bigger than the German DAX and the CAC combined, okay? And probably throw London in, okay? I mean, it's bigger than the value almost of Japan's stock market. I mean, come on, dude. It's
I
actually,
agree. Well, the top.
you want to talk about having all your eggs in one basket? I mean, to have all your eggs in 4 or 5 stocks, relying on an economy, relying on everything to be perfect. These earnings, these numbers, and these valuations are priced for utter perfection. And I believe you're not going to see it now because everybody's sleeping and wanting to buy. But I believe the back half of this year is going to be extremely interesting. And, you know, maybe we'll get a little bit of clarity on what Donald Trump wants to do with tariffs or what he's going to do and how that's going to affect the economy. And you're going to, the jobs numbers have somehow surprised and surprised and surprised. Okay. and they continue to surprise. But eventually, they're going to run out of steam. And listen, I don't use AI a lot, okay? But AI, like for me in my business, in my newsletter business, and everything that I'm doing, I could probably at some point do this podcast as a puppet and basically, feed it information to talk about on the day. How is that helping people stay in their jobs? You know how many people are around this podcast helping me put this on? 10, 12. Okay. But when AI hits, what's going to happen then? You know, Copywriters that write the copy. Why do you need them? You just can Google information. So really AI is going to cause massive job losses at some point in time, and that's going to affect the economy. It hasn't hit yet because it's not mainstream, but I, on my end, can kind of see what it does. And listen, again, the market is, I've never seen a market like this where it's pull the straddle up. It's probably, who knows where it is, probably dirt cheap, you
I think
know.
it's the same as yesterday. Probably, I would think 24.
Well, you pulling
It's,
it up, or
yeah, yeah. Let's see.
24 might be a loser.
It's actually less. It's 23.
Whatever. It's the same price.
22 actually. No, 20. Yeah, 22.
Right. So, okay. So, why is, well, let me ask you a question. Why are you so excited, bullish, saying, we're going to get crazy? How are you going to get crazy with a $20
When
straddle
you
today?
say I'm bullish, what does that mean to you? Like, I just don't think the market is crashing right now. I
I
think
never said the
I've
market is
been very
crashing.
clear about.
You obviously are not listening to me on the podcast. I never said the market
Okay.
was crashing. I said the
Oh,
second half of the year is going to get tough. I'm not saying the
yeah, I
market's
agree with
crashing
that.
at all.
I agree with
How,
that
but I'm
100%.
saying, how do you have an extreme where you're saying like the animals? You always say the animals are going to get crazy. Blah, blah, blah. Like
Yeah,
how the animals getting crazy today on a $20 straddle? I mean, that's
today
the
I don't know how.
that's
I
the
don't know.
betting odds.
Too much excitement.
I think it's way too low. You have to, if you're, listen, we've been making, like, this been a very choppy year for our LSP, our S&P spread trading product. We were up money, down money, up money, down money, and then down money again. And now we're grinding back, knock on wood. I don't want to jinx it. We've had like 6 or 7 winning trades in a row, chopping back, but there's no meat on the bone to make the money back. So we're chopping $2, $3. It's too risky. And come on. You think that the
Yeah,
the S&P isn't going
the
to move
premiums are
20 points?
problematic. I'm
What?
forced to like the premiums are problematic for credit spreads. And what I do to kind of navigate like circumvent that. Sometimes you get a signal early in the day. You could do a zero DT. You still have premium, but with this kind of volatility, once you get a signal and you decide whether you want to lean short or long or neutral, it's like you got to go one DT to get some premium in the door.
Yeah, there's not even premium there. I'm doing 1 day out on top of doing zero DTE, and there's not a lot there. But to me, you're talking about exciting. To me, this market looks unexciting. Um, it would get exciting if we got down about 70 spook points from here, because that would mean people that bought in the last 3 weeks would be down money for the first time in a while. We're not there. We're probably closer to an all-time high, obviously, than that. But right now, it just it feels unexciting. I mean, retail buys small every single day. They can push the market around because there are no players. Nobody's in the market, to be honest with you. You know that. No one's in it. Like, you know, hedge funds are not trading with big size positions. I'm not trading with big size positions. My book, is very, very small. We've discussed it on the newsletter side. My book that I'm running, I haven't added to a trade in months and months and months and months. We're still sitting on these trades. There's zeros. There's really nothing to even sell out. So we're just sitting. I'm hoping people are respecting that. But we're picking our spots in gold and bonds and whatnot. But right now,
I'll
like,
tell you what can shake things up. What can shake things up, and I've been discussing this with you here. I think as we approach the latter half of this quarter, and we're going to get a couple of CPI reports in there, I think the market is going to start to look at things maybe a little bit differently towards the end of the quarter. As you said, you think at the end of the year we'll have some turbulence. So next week we're going to get a CPI report. That one, I think the last few have been unexciting,
I'll tell
but
you, I'll tell you this. I'll make a wager pre the CPI. Okay.
let's go.
I'm going to be away, relaxing. I will be on the podcast every day, but I will be in a different location. But I would say that straddle will not be above $40, 40 to $45. So if you think that's exciting, that's not really that exciting, and it may be
Oh,
even lower. So
yeah,
so so to me, I'll tell you when exciting was. Exciting was 22, 23 when these inflation numbers would move the S&P 150 spoo points every day. I don't know what's going on in the market. Like, I really don't. I mean, it's listen, I've spoken about this. These algorithmic firms see the orders coming. They see they're all to the buy side and they just buy all day. And they go along with retail public. Retail controls the show right now. Retail will get hurt. Okay? It will get hurt. It always has and it always will. Okay? It even got hurt in GameStop and AMC. Okay? Yeah, hello, Roaring Kitty. He made money because he was in early, directed his followers to get in, and then they all got killed. Okay, you know that these stocks got not eviscerated. So the bottom line is the same thing is going to happen. It's just happening. They're buying the same 5 to 10 stocks every single day. So you know where retail lives, you know where the public is. They're doing well, and that's great. Okay, but you got to just be leery of what could happen. And listen, you see it again, like Nvidia yesterday traded $4 trillion, sold off very little, still up on the day. And then like, I was watching it overnight last night, and the Nasdaq was down like 70, and this thing was up 80 cents or a dollar. Now it's up $1.50. It's crazy. $1.50 is a massive move in this name. Okay, it adds, like, each point is 25 billion. It's moving 100 billion every day. It's crazy. So that's where these players are. They love this name. They can't get enough of this name. And you know, I just think it's where's it going from I know everyone's like 5 trillion, and then it gets to 5, 6 trillion, 7 trillion, 8 trillion. Like, the numbers are just numbers, and the numbers are so insane. The numbers are so insane on a valuation basis and on a market cap basis. They're insanity. They're really insane. I mean, no one can fathom what that number is, 1 trillion. I mean, how much freaking product you have to sell, how much revenue you have to do, you know, and it's just, I don't know. Like, look at Apple, for example. And the stock's been doing better, whatever. But think about this. What innovative product has Apple come out with in the last 5 years?
zero, zero,
Right. So
zero.
it's a service business. They're servicing all of these businesses, whether it's Apple TV or the phone or the apps or whatever. It's a services business. It's an amazing. I mean, listen, it's underperformed the peers, but it should underperform by a lot because they've really not done anything in years. Maybe I'm wrong, but they haven't done anything in years. They missed the AI thing, the whole thing. Okay, they tried to do a robo car or a taxi or whatever they were doing. They blew that.
Yep.
So, like, what are they doing that's so unbelievable? It's just like a revenue
Upgrade
collecting
their
business.
upgrade. It's like a utility, basically. Everybody needs them, and they continue the cash flow.
I get
But you
it, but
look, I agree.
at some point your
The
competition is eating your lunch.
They
You know,
will, yeah. Apple needs,
I just don't know how the market every single day just goes up. I just it's like the external clues to me. Like, okay, we're looking at the market right now. Bonds are down,
I
dollar
mean every
slightly.
single day from Friday. I know it was a half session. Friday the market was down. Monday it was down. Tuesday it was down. Yesterday it came back, but okay. But you had
Good.
3 days
The
in a row down.
market, you're now saying the market was down 3 days, which it wasn't. Okay. The Friday is not a session.
Friday down in
Okay.
the half
It
session?
wasn't even down Tuesday, but whatever. Okay. And the bottom line is we're $24 from the high. I don't know what you're saying. We're down every day, but we're $24 from the high. And the low of the week, we're $70 off the low of the week.
But
So
we were
I don't know
down.
what market you think has been going down. It's not this market. This market isn't even down 20 basis points for the week. It's not doing anything. So the bottom line is we're hovering on the highs. Nobody wants to sell. Um, they're buying really one stock for the most part. They're buying Nvidia. They're buying a little Microsoft. Tesla looks a little choppy in here, waiting for the next.
What are you
You
doing
know,
with Tesla? It looks like you have an iron condor on Tesla. Am I reading you right?
yeah,
What do you
they go out tomorrow. I'm sure the 315 calls and the 275 puts.
Oh, you're doing the weeklies. Very nice.
Yeah,
Are you doing that?
I always trade
Okay.
weeklies. I always trade weeklies. I don't like to be out long duration. I can't control. The less news headlines and the less days, the better. Especially on equities. Indexes feel a lot more comfortable, but in these individual equities, you can get really hurt when when the markets move against you off of news. You don't have recovery. So I do equities. I try to do them less than indexes. Index to me is more pure. It's harder to move 500 stocks, even though Nvidia is now worth 50 stocks or 100 stocks of the 500 or more. It would be interesting to add up the market cap of the bottom 100 stocks. I bet you Nvidia has a bigger market cap than those by far. Okay. So, you got stocks in the S&P 500, probably hundreds of them that don't even add up total to Nvidia. So that's where we're living. It's a 7-10 stock market. Um, it would be interesting to take out the returns of like the top five. It would definitely show the Nasdaq being down a lot. Like, so it's really the moves are only coming in a couple of names. It's interesting today why the Nasdaq would even be down. You got Tesla up 5, you got Nvidia up 2, you got I don't even see what's down. So I'm expecting probably the market to turn positive off the opening, probably fail off that. But there's not really a lot to really go over. The euro, which looked like it wanted a dollar wanted to catch a bid. These ranges are so tight. Like the low of the week in the euro is 116.80, it's 117, and the high of the week is 117.40. I mean, you have a 60 pip range in the euro in 5 trading days. It's like dead.
The euro was up overnight on Brazil. I think Lula came out and he's like, "I'm going to retaliate with tariffs." Blah blah blah, and the euro went up. Now it's down again. So I don't know. It feels like the dollar is like a big macro trade for the
Yeah, the
summer
dollar,
on
the dollar,
the
it feels like a no trade. The dollar's a no trade.
upside.
No trade. Bonds look like they were going to break higher at 445. They went to 432. Now that's 435. So, they're in no man's land. Everything's in no man's land. Like gold's in no man's land. Oil, which looked like it was out, is down today. It's funny, other than the equity markets, all of these markets, whether it be, ag commodities or metals or oil and gasoline, and that gas, they go up and down. They trade up and down, and it's funny when you feel
Yeah.
those markets getting too long or too short, they go the other way and hurt the CTAs or the traders. Maybe there's just no retail in these things. Um, but like
Yes,
equities is
that's
so
that's a beautiful point. Yeah,
equities are so
equities are
retail.
emotional. Commodities are forced to be fundamental. You have to because
But why are equities?
they're
Why is
you need to
equities
use them.
emotional? Why do you say equities are emotional? I think commodities are emotional.
They just are. There's something about them. Like when I think it's the mix of I don't know. It's just
Well, why?
embedded in
What's
people's
emotional, Eric? I mean, honestly, how are equities
when
emotional?
you I'll,
They
I'll
are the
explain.
least
I'll explain.
emotional. What? First of
I'll
all,
explain what I mean.
you're on a delay. By the way, you got to get new Wi-Fi or something. You're on a delay. So explain it, but it's just whatever you can
You take
explain.
the average person. Right? You take the average person and you ask him about financial markets. He's not talking about crude oil. He's going to talk about stocks. So I don't know whether that's from decades of Hollywood depicting financial markets as people trading stocks. Nobody depicts financial markets as people trading copper. So they're much more fundamental, or interest rates, right? So these are fundamental. I just feel like stocks are an
But that,
emotional creature.
but that's
They're
not what you
driven by
said. You said
other
it's
markets.
emotional. I want to understand how stocks are emotional. There is zero emotion. They're not selling. If the market
FOMO
went down
and
500
YOLO.
points today, they're
Very
not
simple.
selling.
FOMO and YOLO.
What?
FOMO and YOLO. That's what people are driven by when it comes to stocks.
Okay. Dude, listen, that is a new thing that has happened probably since after COVID. Okay. Because literally
It's a,
before COVID, this is investing. There,
it's a
what are you
very
saying?
old.
Everybody's a day trader? I don't think so. I think everybody buys stocks, either buys stocks and buys more when they go down, or buys stock and buys more when it goes up. There's no emotion in that. Zero emotion. Emotion would have been, crazy volume on the lows, staying down on the lows, freaking out, people panicking, people getting worried. Wait, the market went down 30 plus percent in Nasdaq. That's a crash. Okay. So we literally crashed in March and no one made a sale. So what's emotional? Like that. Listen, I'm not
What's
disagreeing with
emotional? You
you.
just said it. If commodities get really extended because of CTAs, it's going to come down. If fundamentally it shouldn't be there, and it'll come down quick and hard. But in stocks, look, the PE on the Nasdaq is 29, 29, and people are still buying. So there's that difference, and
But
they
I
could
just want to
continue
get
to
to
buy
the
for another 2 to 3 months if if the institutions allow them to. So it's completely
why
different.
would the institutions not allow them to? They're going to let them spend every dime and every leverage time they have. It doesn't freaking matter. What do you mean the institutions? But that's not. I want to get to the understanding of what you're saying that the retail is emotional. I think the retail is unemotional. I think retail, they don't care. The retail is like this. If the market goes down, they don't open their statements or log on their phones. Okay, when the market's up, they log on first thing in the morning, dude. 5:30 a.m. Bing, bing, bing. How much am I up? Where's Nvidia? I mean, come on. When the market's down, they don't log on the phone, and they call five friends and go, "Holy shit, dude!" You know how many calls I got for delayed retirement when we were down in March on that move? People like, "I can't retire. I'm dead." This, that, and then a month later they got all the money back plus. No one sold. I feel like it's the opposite, Eric. I think retail is 100% unemotional. They're unemotional right now. They will become emotional, and you'll see it. A
Yeah,
$20
but
straddle,
when the market goes up, they become emotional or no?
if what?
When the market is ripping,
No,
they become very
unemotional.
emotional. No?
Unemotional. No.
Okay.
Why are you emotional if you're not going to make a sale? What's emotional about it? My friend is long Nvidia.
I think
He's an investor of mine.
when they get a whiff of the market going up, they definitely, in my view, they get extremely emotional.
Howard,
They start.
the market's up 5% for the year. We're doing a little better than the average. This isn't anything crazy. The crazy part is we were crashing and they had everybody on the ropes destroyed. Okay, because the public was heavily invested, not fully all in. Now they're much more in than they were. Okay, but I don't see emotion at all. And I'll give you a great example. I have a very good friend of mine who has a sizable position in Nvidia, made millions of dollars in it, bought the stock at 70, watched it go up to 100. He said if the stock got to 120, he was going to sell. Got to 120. I said, dude, we were out playing golf. I said, did you sell? No, I'm not selling. 140 now, 140. Time out. Let me tell the story. Okay. Stock goes to 130 and crashes to 75. Okay. Lost all the money he made. You know how much he sold? Zero. None. All the money went away. And then the stock rallied back up. It gets back to 120. I'm like, dude, you got your price target again. What are you doing? I'm not selling. This thing's going to 150. It goes to 150. I call him up. I go, dude, did you get out? No. It's going to 200. I mean, come on, dude. That's just insanity.
That's actually the definition of emotional. Because an
Why?
unemotional trader would have gotten out at 120.
I don't think it's showing any emotion. I think it's showing greed. It's just showing greed. It's not
Yeah,
emotion. He's not
it is.
emotional. He's winning. Why does he have to be emotional? Emotional is somebody that's not making money. That's an emotional person. Someone that's making money is not emotional. What is he emotional? Oh my God, I got to sell. So he missed it 150. He sells it 140 or 130. The only thing is, he's never going to sell. Never going to sell. So the point is, I don't feel like the investor is emotional at all. I think it's the opposite. I think they're ice cold right now. They are so ice cold that no matter what the market does, they're never selling. So I don't see an emotional market. And the reason why commodities are more emotional is because the moves are way bigger. Okay. You have a $20 straddle. They're pricing the market to move 20 basis points today. Commodities, oil's already down 1%. It could be down 3%, or it could be back up 2%. It's a completely different animal. Okay. And there's not leverage in the system, and there's not 80 different ways to buy something. Okay. There's only one way to buy crude oil, you know, futures is by buying crude oil futures for the most part. Okay. So that's the difference. As we've been on the air, like I said to you before, when we started, NASDAQ was down. Now it's positive. It can't be down. How could it be down when you have Nvidia up 2, Tesla up 7? I don't see anything down. I mean, listen, I think we may trade off after the opening, but I don't see anything down. And today we have the reverse of what we had the other day. Today, the Dow's down 80, S&P's down 3, and NASDAQ's green. So that's what I'm seeing
What's the
here.
play? Do you see a play yet for today, or no? Not yet.
Yeah, I want to short. I want to short Nasdaq. Not at these levels. If they run it up a little for a trade, but I don't see a lot. I think it's very, very quiet. Gold's
Iron
getting
Condor kind of day, Larry. Iron Condor kind of day again.
no, dude. We discussed that I don't like selling something for $23. You have to be right. We've been right on the direction every single day for the last 7 days. Knock on wood. That's not going to last forever. And, like yesterday, we sold the downside put when we sold off. The day before, we sold the call, but you have to be right on direction. So today, we're going to move 20 handles, 22 handles. From here, we're down 4 on the day. It's a guarantee we're going to move 20 plus handles. Okay. It's just, you got to pick the right way. So I may or may not make a trade today. Markets are, like last night when I went to sleep, they looked like they were not doing well. I didn't understand it because Nvidia was up all night and Tesla was up all night. Um,
Yeah,
so
it was Brazil. It was Brazil. The
I don't think it was Brazil. I mean, okay, it was Brazil. Wait, it was Brazil overnight, but now it's okay.
yeah.
Wait, Brazil overnight was bad, and now it's okay.
Every tariff headline is now worth about 10 point dip. The algo hits it for 10 points.
I
That's it.
doubt that. maybe that's it. I mean, I don't see that. If that's the case, why? I mean, listen, we haven't come back in S&Ps. The low was down like 18 handles. We're down four. It's like that. If you think that's a move, there's no money to be made today. So, what I would say is keep an eye on the dollar. Still looking for it to get stronger, but I don't know. It's just there's just so many trades that are no trades here. Like, I don't even know how you can get excited about the equity market. I don't know what's so exciting. We already
I don't know
had
either. I don't know why you're saying I'm excited about it.
what you said before
We're
the
gonna have earnings
podcast.
next week. We're gonna have earnings next week, and what I will say is, you have a Nasdaq at a 29 PE. It's going to be interesting to see these earnings come out, whether it justifies these kind of valuations. I think it might. Um,
Dude, you
you
you said
know,
before we got on the podcast that that the market's going to explode up because everyone's wanting to buy or I don't even remember what it was, but now you're saying whatever. I mean, listen, the one thing that I know, okay, is there's a betting line, okay, there's an odds maker, and the odds maker is the zero DTE straddle on a daily basis. Okay. That is a way that you could wager or put positions on in the market to capture whether or not you think the market's going to move $20, which doesn't seem like a lot on 6,400. It's like 18 bips, dude. Okay. So I don't know what's crazy about someone pricing the betting odds at 18 bips today, and they've been right literally 5, 6 days in a row. Okay,
yeah,
so I don't see an insatiable appetite. I think people are shocked that the market came back here. I think that the market, we discussed this. I don't really, because we're running deep into the podcast. I don't want to get into this again. But the reason why we took the leg higher a week and a half ago was because people leaned short into the fact that there were issues in Iran and Israel was hitting them, and the market looked like it wanted to leg lower. And they got some positive news, and which really is amazing. Think about this. We bombed Iran, took out their nuclear facility, which we really didn't, okay? And no one said a word about it since. And the government there, you had the guy hiding in a cave, okay? And now the guy's out parading around all over the streets. So I don't understand the logic of this. I don't even think it's a great move because we finally had Iran on the ropes. Someone else did it for us. They were on the ropes and we let them out. So I don't know how positive. Eventually, that is Israel, Iran, Israel, Hamas, uh, you know, Israel, Syria, whoever is coming back. This thing is not over. Okay. So I just think the markets are priced for total perfection here. Um, I expect a little bit of a sell-off, but you got to just trade what the market gives you. And right now it's not really giving you a lot, but like look, the clear trend for this moment is that Nasdaq is outperforming Dow. We have that trade on. That may flip. I think it'll probably flip at some point today, and we're going to roll into the end of the week, and to be honest with you, the S&P is down 24 handles for the week. That's it. 24. So if they're pricing a $25 straddle, we're 4 days into the week and the market's only moved 24 points. So it's been kind of quiet. Let's wait to see how they open, see if they can hold at these levels. I mean, I don't know if they will today. I feel a little iffy on this. I just hope they don't crush them too hard. I got some puts a couple of days out on the downside that I'm going to probably have to hedge. But if you look at the Nasdaq futures, just holding up the market. That's it. And so let's go through it quickly. No trade in the dollar. No trade in bonds that we see clearly, unless you can counter any of this stuff. Gold was down $50 lower than this yesterday. Rallied kind of in the middle of the range, flat on the week again, back to unchanged. Oil looked like it might have wanted to tick 70 on this move, but came in and is now down almost 2% today. See, these are moves, Eric. So you have to be emotional. I just want to let our viewers understand this. Why are you laughing? It's the truth. You have to be
I spend a
emotional if a
lot of
market
time
is.
talking about the emotional side of these indices, but okay.
Why? I want to teach people out there exactly what emotion is because I've traded in emotion. I stood in a pit of 100 guys. Okay. You couldn't have more adrenaline and emotion than that. That doesn't exist. That was one of the greatest things ever seen. You could feel and see emotion, you could see panic. Now you're clicking buttons on a machine against algos that are programmed against other algos. So the emotion is kind of out of it, and now, when we actually do go down, which is very rarely, nobody panics because they know we're going to come right back. So, what I'm saying, what I'm trying to say is when you're trading a commodity that moves 3 to 5% a day, it's a lot different than trading S&Ps moving 18 bips. How are you getting emotional on a 20 bip move? You can't and you won't. But if oil drops another 2% today, which it easily could, as you know, people are getting emotional. You're down 3.5% on the day. Dude, if the S&P went down 3.5%, it would remind me of the day where we went down 200 and you were white as a ghost. The one time we had a down 200 spool handle day, two standard deviations, as you would say. I'm just saying, yeah,
Probably
it's
four.
easy. It's
That was four.
easy. The market is easy right now. The market is easy. We're having 20 bip days, 50 bip days. You have straddles at $20. Come to me when we have $100 straddle, which I'm thinking we're going to have this year, where the computers shut off. When the straddle goes above $80 for the day, there are no computers in the market. It's total Armageddon. Okay, and that's emotion to me. That's emotion. This is not emotion. This is an emotionless market. This is a buy first, ask questions later, retail driven, buy only. So that's what I see. But when you want to talk about emotion in the market, only comes out when you have an extreme move. And when we had an extreme down move, the public just shut their books because they were down so much money. So that's what I can't get away from. They were down so much money, made it all back, and now they want to buy more. Okay. They didn't want to buy, which you fully agreed with. They didn't want to buy on the low. They couldn't. They couldn't buy 4,800, 5,100, 5,300. They couldn't do it. Move
Well, to
happened.
me, right, exactly. So that to me is what I mean by the emotional side of the stock market. It's that they didn't buy when it was all the way down there, as you just said. They keep buying the high. They see the price confirmation. They get more emboldened. They get excited, and that's where all the emotions come from.
But
You're
how
like,
are they getting excited?
how is it going up every day? It can't come down. This is, and
I
I think
understand,
it's
but how are they getting excited? But how are they getting excited? That's what I don't understand. They're giving away options. Volatility inherent is at
saying because
15.
there's an 18 basis point straddle that there's no emotion in the retail trader, but I
I
think
think
it's
there's no emotion right now. None. I'm not even going to agree at all with what you're saying. There's no emotion. What emotion? Emotion that they want to buy more and they want it to just
more.
keep going
Yes,
up. What?
yes,
But
yes.
that's not emotion. I mean, emotion is like,
It's not the emotion you saw
when
on the
you
trading
when
floor.
someone
It's
passes away, or that's emotion. Like emotion is when you're freaking out. That's emotion. Okay, this is cold stone buying. Okay, of retail at any level. There's no emotion. No emotion. I don't see emotion. Okay, what do you think? Let me ask you this. Let's say you bought Nvidia at 150. It's now 164. Okay. Are you selling it as a retail customer? No chance. No chance. Now traders are, and large PMs might be, but a retail customer needs a lot more than that. That's why the Bitcoin trade, even though it's up, on the highs, is not enough for these guys. It's not enough. Look at the move in Bitcoin and then look at the move in Coinbase. Okay. Coinbase is where the money is. Okay. Coinbase is up 50%. What's Bitcoin up on the year? Four? Maybe? I mean, That's where the money is. So the bottom line is by buying Bitcoin, you're not getting at 111,000. I don't see how you're doubling your money anytime soon in the near future. And this thing has doubled 100,000 times or more, So I don't see we're disagreeing in the fact I don't see a lot of emotion. Emotion to me means like a frenzy. That's emotion. Like, I don't know, we can Google AI the word. Emotion is like people, showing, crying, laughing. Like, this is not it at all. This is
I
people.
think I think when the market refuses to sell, when valuations are clearly extended, when they're, like you said, pricing everything to perfection, the fact that they'll keep the market at these levels for longer than anybody would like, I think
But
that is
why would any time out? Time
emotionally
out. I'm
driven
calling
market.
a time. I'm calling a
I
time.
always, I'm
We're late
banking
in the
on
podcast. It's the last day of the week. I'm calling a time.
that. Okay.
You're saying people don't like the market going up. You just literally said the market hasn't come down. It keeps going up, and people are unhappy.
Yeah, professional
Maybe the
traders
professional
want
trader.
lower.
What?
Yeah,
Who wants it
not
lower?
not retail. I'm talking about professional traders like yourself want it lower.
Dude, I want trading. I don't care if it goes higher or lower. I want trading. I want the market up today, then down, then up, then down. I want a day that we used to have every day in trading. Open up, sell off, rally up, sell off. Four different up and down moves. We never have that. That's impossible. The computers aren't programmed to even handle anything like that.
You
Okay.
had that yesterday
And
a
you know how
little bit.
much of the volume is computerized? 90% of the volume is computers. Okay, computer against computer. So retail is in the play, but it's computer against computer. So we're deep into the podcast. I just want to leave everyone with that we're not seeing a lot here. Straddle is too cheap. Market, especially on Nasdaq, has an inherent bid. That may change after the opening if they take these stocks down. Today, the Dow, I don't know what the constituent is down. It may be Boeing. I'm not exactly sure. That the Dow is down a little bit, and S&P is flat, and that's how we sit. And we got to get off because the market's opening in 8 minutes. Um, I'm taking a Xanax because I'm really emotional. I don't want the emotion to show today. Um, I love it. They're emotional because the market's going up every day. I don't know. I think they're emotional. You're going to see emotion when this market goes down every day. Then you'll see emotion. Anyway, have a good weekend, Eric. I appreciate you. Everyone, good luck today trading, and we'll be back Monday morning with more insight, color, and hopefully trade ideas to give you guys. Peace. Enjoy.